Hey, everyone. Before we get into today's interview, just wanted to drop a little reminder to stay up to date with all the latest episodes of On the Margin. You can subscribe to the Blockworks Macro YouTube. Just go up there, just click the little subscribe button, or you can click the links at the top of this episode. It'll take you over to Apple, Spotify, whatever your preferred platform is. Just subscribe there. If you could, leave a rating and review. Really appreciate it. All right, on with the show. All right, everyone, welcome back to another weekly roundup edition of On the Margin. Today, I am joined by my regal co-host, Mr. Mark Yusko, and I'm using the word regal here because we had the King's birthday, and I saw your Queen's birthday this past week.
That's right.
So congratulations to the Yusko household.
Yeah, this is like the longest week of the year for me. It seems like every day is a celebration. You know, we got Elvis's birthday, which happens to be my son's birthday. We call him the Prince William. That was the day I said we were going to crown the king, and I was a couple days late because we did it on the 10th on Hal Finn Day. Then we have my wife's birthday on the 9th, which definitely I had to do some scraping in a good way. I mean, we actually went out and went down to Pinehurst for a day and hung out together, which was nice. But then we had the ETFs on Wednesday, and then you and I mean, twice in a week, I get to do a podcast with you. It's unbelievable, double blessing. And then we had yesterday, 11, lucky number, 11 ETFs, trading on the 11th, which also happens to be the first Bitcoin transaction day. So we had, Block 1 Day, we had Hal Finn Day, Run on Bitcoin Day, we had First Transaction Day, so many things to celebrate. So it feels like this week's been going on and on and on. And I was joking yesterday, I did something and I wore my green pants because, I've been wearing my orange pants just about every day. And they're back. I mean, I do have them back on today, which they could probably stand up by themselves. But I have the magic internet money wizard join us on, because look, this is about, it's time to join us, right? I said a couple tweets yesterday. I said, one, the boomers are coming. Harkening back to the revolutionary times. I didn't realize that by evening, all people were going to be talking about on the internet was Vanguard's idiotic decision to not allow their own customers to buy the ETF, even though they're allowed to buy the futures ETF and MicroStrategy and the miners. I mean, mind blows at the idiocy of that. They have allowed their customers to buy every other form of Bitcoin proxy. They've never said a word. This is 100% political. This is 100% negotiated. Okay, you firms, because Merrill's in here too, Bank of America, they are all in cahoots. And look, they can keep trying to stop this from happening, but it's gonna happen. And if this is if they think this is on brand, they're going to lose an entire generation of investors, an entire generation. And by the way, y'all, that younger generation are going to get our money. So all the money that built Vanguard is going to leave, literally. That won't be tomorrow. It won't be in a day. It won't be in a week. But that's just ridiculous. Anyway, sorry.
I totally agree. I honestly, I'm not that upset about it though, because this is kind of this is how it goes, And to your point about losing the trust. I mean, Hester Peirce, one of the SEC commissioners, wrote a phenomenal statement. You and I talked about this with Michael, and honestly, so I've sat on this, and so we read on the. Let me see. I'll actually get it to read. But when Chair Gary Gensler approved the Bitcoin ETPs, he put out a statement essentially saying what was behind the decision to put out to approve the series of Bitcoin ETFs that applied. He directly stated it was because of what the courts ended up deciding, and he ended on this note. Though we're merit neutral, I'd note that the underlying assets in the metals ETPs have consumer and industrial use cases, while in contrast, Bitcoin is primarily a speculative volatile assets that also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. While we approved the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin. And I was kind of like just kind of laughing at that, and that's a little silly, but
And
I sat on it.
we slash it doesn't give a fuck. I'm sorry. I'm sorry. We never asked for your endorsement nor your approval. The CEO of Bitcoin didn't show up to, sign in. And I mean, the arrogance of that statement, the idiocy of that statement, right?
I'm somewhere in the middle on you. I'm not ragingly angry at it, but I would love if anyone listening to this show has a history, or I just want to understand if there's precedent for these types of comments. You know what I mean? Like
None.
when
No, I checked. None. No precedent.
Okay,
None.
that was my
And in
question.
fact,
It's like, is it usual for this to happen?
No,
I found that very bizarre, actually, the more I sat.
Let's look at this. Did the SEC chairman put out a statement of any kind? Forget one as pointed and baseless and ridiculous as the one he put out on the Bitcoin ETF. Did he ever put out any warning on the cannabis ETFs before they lost 80, 90+% of their money? Did he ever once make any comment of any kind anywhere on the triple inverse levered ETNs and ETPs that have lost 99.99999%? I mean, they literally lose money every single day. There's no way they could ever make money. They're not designed. They're
That's a really good point. That's a really good point.
What one comment of any kind, a tweet, a comment to his wife? I mean, not one comment. And yet, how many hundreds, literally hundreds of comments did the guy make on this? I can't even talk about it.
I no. Hey everyone, we'll be back to the program in just a moment. But before we return, wanted to let you know about DAS London. DAS London is the largest institutionally focused conference in crypto hosted by Blockworks. But I wanted to give you an update because we are now 10 times oversubscribed for this conference. So the bad news is we have actually got to lower, as much as I love you guys, the listeners, we've got to lower our discount rate to margin 10. That's going to get you 10% off. I would highly recommend that you do that soon because you might have noticed ticket prices have gone up 200 pounds and they're only going up from here. And I actually can't guarantee that we're going to have this discount rate forever. Since we last talked, we've had a whole bunch of new great speakers sign up for the conference. We've got Brad Garlinghouse as a keynote. We've got Pascal Gauthier as a keynote. We've got new speakers signed on from Goldman Sachs, from Franklin Templeton, from some of the largest family offices and allocators based out of Europe. So Theta Capital Management, L1 Digital. And actually on day one of the conference, we're going to be having an investor day, which is a Chatham House rules hosted by some of the largest investors in crypto. Then the other thing that happened is we've got our VIP tickets that just went live. There are only 60, but we've actually had a bunch of them that just sold out even in one day. So if you want to be a VIP at the conference, make sure you get your ticket. And again, use code MARGIN10 to hang out with me and Mark March 18th to the 20th in sunny London. Cheers. Well, let me, all right, we're going to go over the data from the day one in terms of volume and flows. And actually, there was a very cool surprise in there to hint a little bit. And then you and I are going to move on to macro, talk a little bit about the inflation print and the cooling labor market. But before we get there, I had so I went back and looked. So for folks who are less aware of the history of Bitcoin ETF filings, the first two folks that filed this were the Winklevi twins back in 2013. Now, I went back and I found the price of what Bitcoin was trading at that period of time, $98. The price appreciation that you missed out on in the last 10 years was 51,000%. So thank you for the protection from the SEC on that regard. But you know what? The only analogy that I could find, and it actually almost lined up in terms of the percent appreciation, was when Apple went public back in, I have the date here, back in the 1980s. In 1980, Massachusetts regulators actually prohibited individual investors in the state from buying the IPO shares because they deemed it too risky. So there's a reason why.
And who comes from that state? What regulator comes from that state?
Elizabeth Warren. And actually, Elizabeth Warren,
yeah.
you know, You know what the sad thing about this? So, like, he tweets out, the SEC gov is wrong on the law and wrong on the policy with respect to the Bitcoin ETF decision. If the SEC is going to let crypto burrow even deeper into our financial system, then it's more urgent than ever that crypto follow basic anti-money laundering rules. And
See,
she got
where
community noted. She got
I know
community noted on
again,
this.
because she got community noted because where is her handler that says, Liz, saying things that are untrue is bad policy, right? Saying that the SEC got it wrong on the law is incorrect. The law is very clear that they got it right on the law, that they could not obfuscate without cause and be prejudiced against a person trying to create a product for the public. So the law is very clear. And look, I'm not a lawyer, but the law was decided, and there is case law and precedent that says the SEC had to do this if they didn't have a good reason not to. So she's wrong on that. And saying they were wrong on policy, it's not a policy-making entity. You're a policy-making entity. Okay? You're part of one. It's not you alone, but the SEC doesn't make policy. So that she's just.
I'm with you. Even on, it's funny, like even on JP Morgan, I saw a screenshot where, you're allowed to trade the Bitcoin ETFs on their, through their platform, but there's a little warning, just like there is on, a carton of cigarettes, that it might cause you cancer. It's volatile and all this stuff. But Mark, all of this stuff, this is going to be when you and I are chatting in 20 years, and we're telling younger people, you wouldn't believe we're going to be telling these stories. U.S. regulators came out and said this, the SEC did this, and all these young people are going to be like, what? No way. You're exaggerating.
I know. I know. I know you're right. I know you're right. Except
and everyone, and the best part about this, every person right now that's listening, being like, oh, everyone's going to memory hold this. No one is going to, in 10 or 15 or 20 years, when this is all normal, no one's going to be like, yeah, I was on the other side of this. Everyone the whole time is going to rewrite mental history and say, yeah, I always liked crypto. I always knew there was something to this stuff.
Well, no, that's 100% true. But what bothers me, right? Because I am a boomer. I am one of the gerontocracy that this is what this is, right? This is gerontocracy gone bad, right? It's hard for me to say these words out loud, but as you age, your brain loses plasticity. You get stubborn and set in your ways. You get cronyist, right? Crony is a term that comes from a physical appearance and action of older people. A crone is a physical descriptor. So this, I don't like it. And I look at what's happening, that you have these, and some of them in their 60s, but mostly 70s and 80s, septa and octogenarians, basically horse trading with one another to try to maximize their stack and keep all you other people in the dark and feed them bullshit like mushrooms. And it makes me angry, right? Makes me angry because I don't believe I'm that. I don't believe just because I'm old, I have to be like that. And it's very frustrating. I mean, the kleptocracy that exists at the top of our political system and the rigging of the game for their benefit and against the average person, it's criminal. I mean, one, it's criminal, and two, it's just wrong. It's ethically and morally wrong. And so to be on the wrong side of ethics and morals, and yet to seem so righteous and sanctimonious in your tweets, it literally makes me retch. Literally.
I'm not going to push back on you on that. I find it wildly frustrating as well, because really, and then I want to get into the actual data here, but really the irony of these.
Yeah, that old guy was really ranting. And by the way,
No,
I want to
I
give a shout
appreciate it.
out. No, I want to give a shout out to, because this happens now every week. And look, this is so cool. It actually makes, I mean, hanging out with you on Friday makes my week, but it makes my week when someone comes up to me in the street and says, "Hey, I watch your show every week. Thanks." And this one was really cool because I took my little guy with all his friends to Kanki, the Japanese steakhouse, for dinner. And I had this great picture where they did the fire thing in the middle, and the kids were like, "Big fire, big fire." So this dude, I mean, it was like on their eyebrows. I mean, it was big fire. But I'm walking in, and there's this couple, and my youngest is 13, and then my oldest is 34. So there's a big gap between oldest, middle, and youngest. And so there's this young couple with a couple kids, and he's like, "Are you Mark?" I'm like, "Yeah." And he's like, "I watch your show every week." And Nikki and I went to school with Sarah in high school. I'm like, "Oh my God, this is so awesome." And so
That's awesome.
shout out to Kyle and Nikki. And I just think it's so cool.
Man, that makes me happy too. That makes me really happy. All right, let's get into the some of these statistics here. I'm going to share my screen just to. By the way, this is so the volume data that we're going to go through here is somewhat settled, but the flows data, we're not going to have the complete picture until later today. But in terms of volume, it was a pretty record breaking day for the entire, let's call it the entire spot family, or family of spot ETFs. So if you're following along via video here, either on Spotify or YouTube, you can see tickers. So GBTC is the Grayscale Bitcoin Trust, which successfully converted into an ETF. And if you missed Mark and my interview, or chat with Michael, or there's a couple good ones to go back and listen to. We've talked with James Seifert and Matt Hogan and Eric Balkunas a little while ago, but the amount of assets that GBTC was coming in, obviously they had about 25 billion in AUM in that trust, was a massive advantage. Although they kept their fees extremely high, 150 basis points. So that was they had that working against them. Just very interesting. IBIT is the BlackRock file, the iShares BlackRock filing. At BTC is Fidelity, ARCB is ARC, et cetera, et cetera. So overall, about $4 billion worth of volume on the day. Just very good, very good. There's a whole complex number there, but that includes GBTC as well, and BITO. BITO had another record-breaking day, like $2 billion worth of volume on the futures ETF. I guess that was hedging or speculation or whatever. But overall, the volume number was, that's the number that's being talked about a lot. It's important.
Yeah, this is the wrong number to talk about, though. So much of this is people like Ken Griffin getting richer. And, there's a massive business of scalping ETFs. And this didn't just start yesterday. This goes on every single day. There are firms like AQR and others. They have entire quant groups, and Millennium and a bunch of the big hedge funds, Renaissance, they do this all day. So there were a lot of people who were shorting Bitcoin and buying, the ETF, or shorting the ETFs and buying Bitcoin, or shorting BITO and buying, FBTC. And I mean, the amount of arbitrage that goes on, and part of it is because of the unique ways they trade, right? ETFs trade literally the last minute of the day. Right? They don't actually trade all day. They actually do their buying and selling the last minute of the day. And so there's a whole bunch of stuff that's going on. The other thing that people aren't paying attention to is, again, those flows have nothing to do with the money that came in, which is something you're going to talk about.
Right. So on the flow standpoint, that's kind of you're absolutely right on. There's a whole bunch of different incentives around the volume. Also keep in mind that, especially with a product like GBTC, there might be some trade or there might be some selling, right? Some investors that have been locked up for a really long time, haven't had the ability to get liquidity, they might be moving out. But what we're looking at now is the day one flows volume. And again, I think this is incomplete. You'll notice that GBTC is zero. We should probably expect net outflows from GBTC, but we're looking at, as of right now, $720 million worth of inflows. Again, we should probably expect that number to be adjusted lower. But in terms of the winners, the number one winner in terms of flows was BITB, which is Bitwise. Bitwise, baby, let's go.
Yeah, and look, I did it. I actually did Scott Melker's show yesterday live during the open with Hunter. I mean, Hunter's such a great guy, and we've been partners with them really since inception. And for him to be on the show with us live at 9:30 when things started, and you hear this big thing in the background, all those guys were cheering, because it's 6:30 out in California, and Scott was like, "For the love of Satoshi, will you please go be with your people and celebrate?" And it was cool. But Hunter's amazing, so I'm super psyched. But look, they had a very simple strategy. We're going to be the lowest fee ETF, and so they had to revise their fees down. What's crazy? Here's some inside baseball. The original discussions about where people were going, and not like collusion and but what people were hearing was that BlackRock thought they were going to start around 80. And BlackRock's first salvo into the war was 30. So somebody thought better of it, and they got all the way down to 30. And then there were multiple revisions over the last couple days, and BlackRock got, I think, down to 25. I think it's 25
20 basis points, actually. Maybe. Here, I'll look it up.
Is it 20?
I'll look it up here.
Well, Bitwise is 20. And I think that's number one. And then someone else is 21 or 22. And then I thought BlackRock was 25. But anyway, they won the race to have the lowest fee, because at the end of the day, what financial advisors want is the lowest fee ETF. That's what they want.
What's going on, everybody? Thank you for listening to On the Margin. I just wanted to take a quick moment to let you know about a very special offer that we have coming out of Blockworks Research. Now, many of you will probably be familiar with our platform, but Blockworks Research is the most blue chip spot to get research, data, governance, models, and a whole lot more about the leading DeFi protocols in the space. I've leaned on our analysts time and time again to explain complicated concepts going on in DeFi to me like I'm 5 years old. They can do the same for you. If you invest in DeFi or are just interested in it, it is an absolute no-brainer. As a listener of On the Margin, and to say thank you all for listening to the show, you can use Margin 10 for a 10% discount, and that gives you access to everything, which would be weekly in-depth reports, live data, all of that good stuff. So again, that's code Margin 10 for a 10% discount. Link is in the show notes. Sign up now. Thank you later. Mark, you are right. It is 25 basis points. And actually, I'm going to Shill, a Blockworks product here. We actually put together a dashboard. I'm going to share my screen where we track all the live info about ETFs. So we've got it every single issuer for not only spot. I mean, spot is that's the important products to be tracking right now. But you can see here we've got
Nice.
AUM, we've got volume data, we've got custodian, we've got fee, market cap, all of this good stuff here. So you can track all of this stuff live here. So definitely head over. Actually, you would be shocked at the amount of people that have already hit this page. So it's a helpful resource. But so congratulations to Bitwise. And maybe you know this, Mark, but just having been close to the team. Oh, I have to shout out Bitwise. They are my outside of Blockworks, Morgan Creek. I think they're my favorite team in all of crypto. So Hunter, but also Matt, Teddy, that entire team, everyone that I meet from that team is just genuinely good vibes, really competent, intelligent people, long game. They've been active in crypto the entire time that I've been here. They've been very patient about, they've had this very clear vision that they stuck with in a very challenging environment, because when they probably started, the industry wasn't ready for passive investing. They just had this vision, didn't waver. So it's just nice to see the good guys win. And that doesn't always happen, but in this case, it's still early, but I feel like the good guys won in this case, and I just couldn't be more happy for the Bitwise team.
No, it's a great point. And look, having a vision, okay, that's good. A lot of people have good ideas. Executing on that vision, really important. Probably more important than having the vision. But then, because a good vision, like a really good vision, necessarily is going to be early. The euphemism for wrong, right? If you're going to feel wrong at first, and you're going to get punched in the mouth. And they got punched in the mouth multiple times, and they got back up. And they just kept focused on the vision. And they also did the right thing. They raised money from VCs like us and others, and they spent money to get the great people in with great experience. Like Matt ran ETF.com. I mean, he knows the ETF world better than most people. And, their trader, Hunter was saying this yesterday, their trader, they took from BlackRock years ago, okay, when she was trading $250 billion, $250 billion to come manage their paltry 250 million. And now they're well over $1 billion and raised 200 million yesterday in a day. They raised more yesterday, new inflows, than they had when she came over. So that's cool. That's a great story. And here's the thing: Vanguard making bad decisions, alienating a whole generation. These guys have always said they want to be the next Vanguard, and that's what's going to happen.
God love them. God love them. And, if you have an experience, if there are operators who've built a business or in the process of building a business in crypto, you've undoubtedly gone through that period of time where it felt like a not great idea for multiple years in a row. And it is not super easy to keep going. So one foot in front of the other, Bitwise, congratulations. Now, in second place, we have, let me share my screen again. In second place on the chart here, we've got FBTC. So that is the Fidelity ETF. Not a huge surprise there, but we've got IBIT in third with and by the way, the numbers here on the actual flows are, so for Bitwise BITB 237.9 million. Fidelity was right behind with 227 million, and then IBIT is 111. So sort of just, and then it trails off after there. ARC B is 65.
But then again, there's a reason it played out like this. I mean, there's an absolute reason it played out like this. Work. Who did the work? So BlackRock, okay, they announced in June they were coming in. And Larry went on TV a couple times. But they didn't go out and educate financial advisors. They didn't go out and sit with individual financial advisors in Topeka, Kansas, or Seattle, Washington, and tell them this is what you do, this is how you do it. Hunter said this yesterday. He said they did 20,000 meetings last year. 20,000 meetings with financial advisors to get them. And again, they have BITW and others, but 20,000 meetings educating. And so it's not because look, that number for IBIT is going to go to the moon. It's going to be the biggest one. It's going to be monstrous because the sovereign wealths and all the other people that are part of the network are going to support, King Larry et al. So yeah, it's not going to surprise me that IBIT becomes the biggest, like iShares are the biggest in everything. Fine. Fidelity isn't surprising in the sense that Fidelity, because of Abby and their great team, they have an amazing digital team led by Tom. I mean, they're awesome. They also educated their clientele, and those clients, both Bitwise's and Fidelity's clients, were ready on day one. Everybody else is hoping that the people who had their heads in the sand, the UBSs and the Merrill Lynches and the Raymond James and all these other people said, no crypto. finally say, yep. And we got a little taste last night, sadly, where Vanguard and Bank of America, Merrill Lynch said, nope, we're solid with Ms. Warren, and we're not going to allow this speculative asset. That will change. I'll give it 1 week. 1 week, Vanguard changes their tune. When they start seeing the amount of people who set sail, that was my little hashtag last night. Just set sail, just leave. So that Bitwise number is going to grow because they did the work, they planted the seeds. And Fidelity, how many people are going to transfer from Vanguard to Fidelity today? 1,000, 5,000, 10,000? It's going to be a big number. Big.
All right,
that's going to be a big number.
We're going to have to keep our eyes on that. One, maybe you know the answer to this, Mark, but one thing I was going to bring up before is in the Bitwise filing, I remember so BlackRock was seeding IBIT with $10 million, which in ETF land, again, that's a big number. Bitwise was seeding with 200 million, which I think, been using this word a lot recently, but it's pretty unprecedented in terms of the amount of seed. Do you know what the story was with how they ended up securing that? Did that play a big part in their winning the flow? Sort of
huge part. And again, I actually don't know the specific details. I meant to ask that to Hunter yesterday, but I just didn't get to it. But that was secured before. Okay. Now, whether that's a single 200, which I don't think it is, or whether that is a whole bunch of people who said, yep, we're going to be ready on day one. Because it was really interesting. I got a tweet, and I love Twitter. I mean, I love Twitter. The people I meet with real expertise, like on the front lines, they might have 7 followers, but they're really interesting people. And it's just so cool. But this guy tweets at me last night that actually he wasn't even tweeting at me. I just came into my feed and he said, I can confirm that these brokerage firms don't get it, right? I'm at this firm, they have $1 trillion of assets, and they will not let me buy this for my clients, even though my clients are asking. So in some places, they'll let you sign a waiver, which is just, they'll make you sign a waiver for triple levered inverse, but you got to sign a waiver for this. Because I can't do it. And I just sent him back some stuff saying, look, thanks for your vision. He's this young guy. He and his wife in this great picture on his PFP. I said, just thank you for your commitment and your vision. Patience is a virtue, and this too shall pass, and it'll all work out. He's like, yeah, I hear you, but I don't know. Maybe it's time to go find a new home. And I think people don't understand how important these decisions really are. And, but my point there was that he said in this tweet, they told him it was going to be 3 months, that they had to wait 3 months to see if the liquidity was adequate. And I'm like, okay, that is a relic, literally, that is a relic of 10, 15 years ago when most of the money was in mutual funds. And you really did need to see if enough money was going to come in the mutual fund to make it efficacious because the fees were high. Today, we know in real time that there was plenty of liquidity in these products. Like it set records if you put them all together. Okay. And I do find it awesome that the crypto ETF, ETP, beat the number one previously, which was an ESG EFT. I love that.
Mark, I want to get your take on some of these macro topics here on inflation.
Yeah.
So,
well, that's definitely good because I just did my 10 surprises last night. So I'm all about the big macro stuff.
Okay. So you know what? I mean, all right. So I'm going to ask you about inflation because we just had a print here. But any other surprises, that you thought were relevant? I would love to.
Well, no, inflation was part and parcel of two of our surprises. One was on interest rates, and the second was on bonds. And look, I mean, I didn't see what the print was, but look, inflation's going down. and it's going down fast. And the only thing left in CPI that's keeping it even modestly high is rent. And rents have now fallen 7 months in a row. So, but used car prices have collapsed. They've gone, to be honest, you've seen Tesla car prices. Holy crap, used car. You don't want to have to sell your Tesla. Driving it, pretty good, but don't try to sell it. But used car prices generally are down, and oil prices have collapsed and year over year had negative impact on inflation. So I think there's going to be more talk of deflation. So, one of our surprises was there's no impetus for rate cuts at all. Yet he may do that. And if he does, the surprise could be that we get the double, the chart that's going around that everybody's looking at, which is the double spike in inflation in the 70s. What people forget about is that actually wasn't a spike in inflation per se. It was a double counting literally in the data that Volcker had his guys assembled because they were counting rates and mortgages at the same time. So all that said, I think deflation is coming, not inflation.
You may be very right about that. I don't even know if I have an opinion. I think I'm neutral on this particular opinion. I don't think I have a great forecast for the secular inflation picture, but in terms of where we're at now, for folks who are following along only via audio, not on screen, we're looking at the chart of U.S. CPI headline, and we're looking at core. And we've had a flippening in inflation for a while, and that core has remained stronger than headline inflation for a while because we've had deflation in a couple of different categories. But we've had a slight rebound, I guess, month over month. So the December print came in at 3.9% for core and 3.4% for headline. So a little bit stronger, I think, than folks were expecting. And part of the reason for that is goods inflation, which has been it's been outright deflationary for the last couple months. Turned slightly inflationary again. And if you look at the different categories of the top 5 individual contributors to U.S. headline, shelter is still playing a big role there. Motor vehicles, insurance, electricity, that sort of thing. It's not this isn't a massive inflation print one way or the other. I think it's a little bit warmer than.
Well, and that was the point I was making, is that shelter component is now the largest component, and it's nosediving, and it's gonna continue. There's way too much supply, particularly of multifamily getting built. I mean, you drive around Chapel Hill where I live, thousands of apartments being built. I mean, thousands, and they're you drive by them at night and they're just dark. So that rents are coming down, but the thing that's just not being talked about enough, the money supply growth, both in the US, but also globally, is contracting at the fastest rate ever.
Really?
Ever.
I didn't realize
we
that.
Just beat the 1929 print. It is literally, it's like, through the bottom, like, of the screen, like my fingers going off the screen. I mean, it's through the bottom of the graph. And look, we needed to do that because they made a mistake in 2020, and the cult of Keltonites, they created too much money, and it went into everything. Right? We've talked about this. My home did not appreciate. My home didn't get better. It actually wore out, but the price went up because the money got less good, and so they got to fix that. And I mean, again, on the way back from Pinehurst, my wife and I stopped, and we got one sandwich to split at this amazing place called Merritt's in town that does these amazing BLTs. It was $20 for one person. I mean, it was two people because we split it, but $20 for a sandwich?
I'm with you. I feel like that is my constant life here in New York. I'm just everything shocks me how much things cost. But let me ask you this though: how how can the money supply be going down? I just looked at, so one of the other, I mean, it's not a surprise anymore. It's my least favorite statistic in the world, but the U.S. deficit
Yeah.
for Q1 or for the last quarter was $500 billion. So run
Yes.
rate $2 trillion deficits per
Yep.
year. Doesn't my understanding of how this works is that the government spends money into existence roughly. So how, if we're running a $2 trillion deficit, how can the money supply be going down? Or is that a silly question?
No, it's not a silly question. And there's a mechanism that I can't describe well without kind of looking at a picture, but deficit spending certainly is a component. So fiscal is certainly a component of the demand for the creation of money. But the other side of it is the monetary policy, which has to do with loan demand and loan creation. Bank lending went negative for the first time in 70 years, 60 years. I can't remember the exact period. But that's a huge part of it, the money and credit creation. And then there's a multiplier effect. And again, I don't want to speak out of school because, although I do that a lot, but I'm close enough. I'll just talk about it. But here, there's so many parts to the actual M2 money supply, but a big chunk of it is you create the money, but then there's a multiplier effect because of credit, and that is collapsing. It's collapsing. And the velocity of money comes in here too, and the velocity is like plumbing new lows.
Okay, that makes sense. Yeah, because the at least in my understanding on this, you're getting deep into the monetary plumbing here. It's actually a really critical. It's funny. It's a question as critical as this there can be so many opinions on. But what is how do we create money in the U.S.? It's the one thing I feel like the cult of Kelton, the MMT people got right is the order of how money gets created, which is basically the government decides to spend money, which is the deficit, and then you kind of sop up that liquidity by issuing bonds. So anyway, something to keep an eye on. And I feel like it was sort of a nothing inflation print. I guess we'll have to see what we end up getting this next month. But it was kind of a muted reaction from the market as well. So
I don't know if you're gonna be able to see it, but you're right a little bit on that. If you can see, this is money supply growth, right? It went negative. Yeah. It's below for the first time in 100 years. But to your point, it did tick up a little bit here. This is the latest print for December. So that probably reflects a little bit of that crazy deficit number that you're talking about. So that's the newest number that just came out.
Yeah.
A week ago.
It's the first.
So
yeah. That might be my equivalent for you, Mark. I just get extremely frustrated with that number. I'm just blown away that's our policy, but I guess it is. So in terms of the market reaction to the CPI print, again, pretty muted.
Well, but actually, just to go back to that's cronyism, Michael. That's back to the gerontocracy. All of that is preventable, but it's because all of these senators and congressmen have cut deals with one another. And it's like, okay, if you give me money for my bridge project in my state, I'll give you money for your defense contractor and we'll send it to this country and they'll send it back to us. That's cronyism. And that is because of the gerontocracy.
So, you and I have slightly different worldviews on this. I would agree with you. I'm going to repeat the George Carlin phrase here, which is you don't need a formal conspiracy theory when interests converge, and that's how I believe it happens. But I will say, and I'll see if I can find this clip for you. But I was watching a clip of Mitch McConnell get interviewed about Ukraine, and I got to be honest. I mean, by the way, I'm going to caveat this by saying I've seen a lot of very realistic deepfakes recently, so I actually haven't gone and seen if this is authenticated.
Right.
So
Right.
I don't know.
No,
We're
I
gonna
know
have
the
to
one you're
figure
talking
out.
about. It's not
We're
a
gonna
deep
have to
fake.
figure
Well,
something out here.
yeah.
But anyway, I watched this video of Mitch McConnell talking about Ukraine. I suppose I haven't checked to make sure it's not doctored, but if it wasn't, man, this was a pretty stunning. I mean, he basically was just like, yeah, I mean, we are actually supplying. We're getting to rebuild the industrial base. These are jobs going to Americans. We're not dying over in Ukraine, and we're getting to disrupt one of our greatest foes. And I was like, man, that sounds a lot like what Mark says sometimes about this. I mean, that is, anyway, but
I don't know. I mean,
anyway.
you couldn't pay for that kind of honesty. But again,
Yeah.
he's so old. I mean, and again, I don't know if you've seen the video of Mitch where he gaps. I mean, and this is scary, and I feel badly for his family. I mean, he was talking, and he just stopped. Like he literally stopped, and the aide had to come up and say, Senator, you were saying. So when you lose the filter, that's when you get the admissions that you got to watch. And I'm pretty sure that one's not a deep fake. Because I watched the same thing, and I actually watched live.
I'm looking it up. Yeah, I'm watching. I just looked it up. I found it in The Hill and these other sites. So yeah, apparently this was a real interview. So
yeah, like I said, I watched it live, and I just went, "Yep, thank you. That's helpful."
Yeah, pretty wild. So going back,
like
to
never ask your grandparents how you look, right?
We need younger people in Congress.
We need younger people. We need younger people.
I agree.
We need Vivek. We need Vivek. I'll tell you what. I don't want to make this
I'm not a Vivek guy, to be honest. He wants to defund the Department of Education. I just can't get behind that.
No. Okay, that's okay.
If I was a single issue voter, I'm an education voter.
Well, now I'm never going to say anything nice about him. So you just lost me. He's such a good communicator, and he's smart, right? But that's a bad platform. So I am actually a single policy. Education is my thing. So all right, he's dead to me.
I'm with you on that. All right, let's talk about this, and then I want to close talking about the Circle IPO. So the last thing here that we're looking at is muted reaction on markets on the CPI report. I feel like most people also agree that it is a bit of a nothing burger. We're looking at, if you're following along on screen, we're looking at what the market is pricing in for Fed funds change in 2024. Basically, where are we going to end in terms of rate cuts? We're pricing in about 150 basis points worth of cuts, and
impossible.
And at this,
literally impossible. Right?
I think I've got the odds here. Yep, of a rate cut in March at about 70%. So that's when people think we're going to start. You think
there's zero probability? And what's amazing, it's 5.5. I'm not sure how you get a half, but it's 5.5 are priced in, and starting, in March, which means every meeting in the year there would have to be a rate cut. No way that's happening. The one that got me though, Michael, was 2024. The dot plot. So today the dot plot is perfect. We're 5.5. Okay, great. But then by the end of this year, the dot plot had spread about 150 basis points, from highest to lowest. By end of 25, there was one governor who said, we're going to be at 5.375. And there was another one that said we're going to be at 2.375. Like, do you know something that I don't? I mean, you're telling me we need to go back to global financial crisis-esque rates within 24 months? Yet I thought we had the greatest economy ever. I thought there was no chance of recession. I mean, why would we go to 2.375? Now, unless they finally realized, we can't afford, I think the new number is $967 billion of interest on the debt this year, and 21% of the debt has to be refinanced. So that number is going to go up. So maybe that's why they're going to be forced to cut. That's interesting. So I'm going to take the under. I'm probably going to be wrong, but that's what I'm going to take.
You might be right. This has been another sort of long-standing and contentious debate between different thinkers, which is, can we afford? Does the U.S. Take into account our debt and the amount of interest expense when we're talking about seeing interest rates? And there's a large contingency that has a lot of good arguments that they don't actually care. There is another contingency which would argue, in just a spirited as a way that in the long term they have to care. I don't know. I can see it in the long term. Probably
you don't have to care until you do. Right. That's the way it works. You don't care, and then you do, and that's how it's always worked. And if you go back in history, it doesn't happen very often, but those collapses, when they happen, they're ugly. Right? Whether it's Weimar, or whether it's 1929 to 33, it doesn't happen very often, but yeah, it's ugly. And so you're right. You don't have to worry that there's $34 trillion of debt. Well, it's not debt, because if you're never going to pay it back, then it's not really debt. Debt actually is an instrument that two people exchange with the expectation of paying principal and interest. Right? That's a bond. That ain't what this is. This is an accounting entry that's like, just don't worry. Just don't open the closet. It's like when you have a closet that's totally full and you put the last thing in, just don't open the door and you'll be fine. But if you forget and you open the door, you're buried. And that's where we are.
Yeah. All right. I in our closing minutes here, I just want to, this sort of went under the radar this week because everyone was so focused on the Bitcoin ETF, but I'm looking at a headline here. Circle confidentially files for IPO following banner year for crypto stocks. So Circle, as listeners of this program will probably know, is the issuer of USDC, the stablecoin. And they announced on Thursday that it is, again, they confidentially filed paperwork with the SEC for their IPO. So I think they're sort of looking at, one, there's renewed interest for clearly Bitcoin. It's been a good year for Bitcoin. It's also been a good year for crypto equities. Bitcoin mining stocks have done extremely well. Coin, up some 400% or something like that on the year, has done extremely well. And, Circle's probably gauging that there's investor interest. And
well, let's caveat that. So, because I got in an argument with my, they're my partners and former partners, and that they're my active partners for Funds 1 and Fund 2, and now they're less active on later funds, but Pomp and Jason. And in December, and you can go back and you can see Pomp tweeting about this. They're like, oh, the miners are going to the moon. It's going to be amazing. Like, no, they went to the moon, right? They had their recovery from bankruptcy. It was a great trade a year ago. They went up 400, 500%. And I'm like, guys, this is bad. Because on top of the fact that they're overvalued and they're not tech stocks, they are commodity stocks, right? They produce a commodity and their assets to value. The asset they produce appreciates, but they don't get to hold it. They have to sell it to pay the electricity bills. So long story short, I thought it was bad. And what's going to happen is there's going to be a rotation out of the proxies, the Bitcoin proxies, into the Bitcoin ETF. So
Mark,
since we had that argument, and they went down, 14, 16% yesterday or 2 days ago. So people were watching this on Saturday. So on Thursday, on the day of the ETF, they went down 14, 16%. And, MicroStrategy, look, I love Michael Saylor. I love MicroStrategy. I think it's a great levered bet on Bitcoin. But the stock's gone from 720 to 530 in 2 weeks after having a great run in 23. But it is and was a proxy, right? Yep. People couldn't own Bitcoin directly, so they owned it. And now you can own both. That's the thing. You don't have to sell. This is my old Scaramucci problem. When Mooch went out and he said, hey, y'all put 1% with Yusko. You got too much Yusko risk. Give me half. I'm like, no, Mooch, say You put one with Mark, give me one, and have 2% in alternatives, because that's more than, you should probably have 10, but 2 is better. Don't take half mine. So you didn't have to take from MicroStrategy, just buy the ETF too, because you don't want 0.5% or 1%. You want 2, 3, 5, 8, 10% of your assets here. But the proxies and the miners in particular, I would not be buying them right now, personally.
I'm in that camp. I've also made that argument that I think, hidden premium in proxies, it's probably going to be extracted through the Bitcoin ETF. That said, I love Coinbase because for many reasons.
Love Coinbase. Coinbase is different.
And I love Circle.
Love Coinbase.
And I love Circle. And I love Circle. And I think, as I would call myself a crypto native. One of my pain points operating in this industry has been there are a lot of people that are really professionals and like blue chip, but we got a lot of people that aren't blue chips too. And it's just been nice to follow Coinbase as hey, we can point to our blue chip, regulated public US company, and I would like more of those. And Circle would be my top pick for.
Well, and Coinbase did $7 billion in a single day on their OTC desk the other day, set an all-time record. That is just totally misunderstood. They're going to custody 8 out of the 11 or 7 out of the 11. That's misunderstood. And yes, there are some people selling coin to buy the ETF, fine. But Coinbase, love it. And Circle in USDC, yeah, there's some competition with Tether and all that good stuff. And I'll throw a bone to the Sol guys. I'm nervous about Solana. I still don't believe they fixed all the bugs and stuff. But using a Solana wallet with USDC, it's like butter. I mean, it's awesome. It's super fast, super cheap. And that is a use case, a global use case, again, which Ms. Warren fears, where I can send money anywhere I want with I don't actually have to ask for freaking permission. And, and you got me on this because you invited me down to Texas, and I went to permissionless, and I came away with my new life motto, which is live permissionless, right? I am sick of living in the permissioned world. I'm sick of it. I changed banks. I left Bank of America and went to a local bank here just for that reason. I still have money in the bank. It's not all in Bitcoin, but I am moving increasingly to live permissionless, and that's awesome.
I love it, Mark. That's as good of a place as I need to end it. As always, best hour of my week, my friend, and I will see you here same time next week.
Awesome. And I love repping Blockworks on the logo shirt. Very nice.
Yeah, baby. Love this.
I don't seem to have one of those.
We can fix that. That's a solvable problem. We'll hook you up.
Have a good one.
All right. Cheers, Mark.